Hello, and welcome to our presentation today to give a general overview of the Employee Retention Credit for 2020 and 2021. I am Vicki Stalnaker, shareholder at JRBT, and also Director of Operations for Payroll Systems, a division of JRBT. As with all of our other presentations, we have our disclaimer that this presentation is only for general information in regards to the Employee Retention Credit. Please reach out to your legal, tax advisor, accounting advisor, or payroll advisor to see how the Employee Retention Credit applies to your business. So what is the Employee Retention Credit? It is a refundable payroll tax credit that was created back in 2020 when the pandemic first began. And the reason why it was created was to encourage employers to keep employees on payroll by giving them this credit against wages. So it all started back in 2020 with the CARES Act, and we've had multiple amendments to the Employee Retention Credit to change it so more employers were eligible and also to extend it to other quarters. So at the very beginning, the Employee Retention Credit was not available to employers who received PPP loans in 2020. In the latter part of 2020, they amended that to allow employers who had PPP loans to qualify and also extended the Employee Retention Credit into the first part of 21. Later on in 21, as part of the American Rescue Plan Act, it was also extended into third and fourth quarters of 21, and it also established a new criteria for recovery startup businesses, which we'll cover here in a few moments. At the end of 21, however, there was another act that was passed that amended it once again, that stopped the Employee Retention Credit at the third quarter of 21, except for recovery startup businesses that were still allowed for fourth quarter of 2021. Now, there is pending legislation that is still trying to extend the Employee Retention Credit into the fourth quarter of 21. However, it has not been successful to be passed and signed. So as far as for employers with the Employee Retention Credit, as far as what wages are eligible, for most employers, it's available for wages paid after March 21st, 2020. That was kind of when all the shutdowns started to begin, through September 30th of 2021. There is specific criteria that employers must meet in order to qualify for the Employee Retention Credit, which we'll cover as well in a moment. Those recovery startup businesses that I mentioned a moment ago are available for wages paid from July 1st of 21 through December 31st of 21, which is quarters 3 and 4. So how do we claim this Employee Retention Credit? Since it is a payroll tax return credit, it is filed on 941s, 944s, and 943s. However, the due dates have passed for those original returns for 2020 and 2021. So we are now filing amended returns. Those amended returns are paper returns, and they have to be filed for every quarter that you qualify. So if in 2020 you qualify for the third quarter and the fourth quarter, you have to file individual 941Xs for each one of those periods. And the reason why we're bringing the Employee Retention Credit up to everyone, it is not too late to file those amended returns. You have up to 3 years from the original due date to claim that credit, which means the 2020 credits, we can still go back and amend returns and up until next year, starting in 2023, is when I'll start phasing out as far as filing those returns. Now, IRS's processing timeline for these amended returns and processing of the credits has been all over the place for the past 2 years. Returns that were filed last year took anywhere from 9 months to over a year for those returns to be processed and to receive those refunds. And there are some clients that are still waiting on those refunds. However, we do expect them to still be issued. Now for this year, IRS is starting to process a little faster as far as new returns that are being filed. And some employers are receiving those credits within 3 to 6 months. So let's talk about a general overview of the actual credits and the criteria for 2020 and 2021. Now, each year has its own set of guidelines, and it's due to all of the legislation changes that were passed. during 2020 and 2021. So make sure that you are looking specifically at each year whenever you're looking at the employee retention credit. So for 2020, the credit is a 50% credit of up to $10,000 of wages and health insurance per employee for the year, which gives us a max credit of $5,000 per employee for 2020. For the criteria, we have two different ones where the employer needs to meet at least one of them. So for the governmental closure, it's a partial or full suspension of operations due to a governmental order. For the significant decline in gross receipts, it's a 50% decline in gross receipts based on how you report those on your tax return, comparing 2020 reporting quarter to the same quarter in 2019. Now for 2021, our credit amounts have changed. It is a much larger credit that's available in 21. It's a 70% credit of up to $10,000 of wages and health insurance per employee per quarter. So we have a big distinction there. We have two big major changes. We went from 50% credit in 2020 for the entire year to a 70% credit in 2021 that is on a per quarter. So you end up with a max credit of $7,000 per employee for quarters 1, 2, and 3, which is a max of $21,000 per employee in 21 if you qualify for all 3 quarters. The governmental closure criteria remains the same. It's a partial or full suspension of operations due to a governmental order. The significant decline in gross receipts, however, changes a little bit for 21. We have a 20% decline in gross receipts, still on the same way that you file your tax return for gross receipts, comparing the 2021 quarter back to the same quarter in 2019. They did give us a new option in 21 to use the immediate preceding quarter for your comparison. The reason why they did that is employers were having a hard time closing their books to determine their decline in gross receipts prior to that payroll tax return being due. So they decided to allow the previous quarter. So for example, if we're looking at the second quarter of 21, we can compare second quarter of 21 back to second quarter of 2019. Or we can use the immediate preceding quarter of first quarter of 21 compared to first quarter of 2019. In all of these items, we need to make sure that we review any potential limitations and exclusions that are in the law that may apply to your business. So once again, this is just a general overview of the credits and the criteria. So recovery startup businesses. This is in quarter 3 and quarter 4 of 21. We still have the 70% of the $10,000 of wages and health insurance per employee per quarter with a max credit of $7,000 per employee. However, the overall total employer credit for the quarter is limited to $50,000. And this is for businesses that began carrying on trade or business after February 15, 2020. And the employer has to not be eligible under the suspended operations or gross receipts criteria. And there is also a gross receipts test that these recovery startup businesses, that their average gross receipt for the 3 taxable year period does not exceed $1 million. And once again, we have to review any limitations and exclusions that may apply to you as an employer whenever you're reviewing this ERC eligibility under the recovery startup business. So some of the potential limitations and exclusions. There's a limit to the number of employees you can have in 2020 or 21 to be eligible. You also have to look at some of your controlled groups and your affiliated service groups, which deal a lot with your related party organizations or ones that have very involved interactions with each other. You have to look at business acquisitions and mergers that occurred during 2019, 2020, or 21. Whenever you're looking at whether or not things need to be combined, looking at gross receipts tests, you just need to review the IRS information to see whether or not that applies to you. You have to look at owners' wages and related family members because they may be excluded from employee retention credit criteria. We also had in 2020 and 21 paid sick leave and paid family leave that was available to employers and their employees during the COVID-19 pandemic when it first started. We have to look at those because you cannot double count on credits. You cannot take credits for the paid sick leave and family leave and also take it for the employee retention credit. The same thing applies to your PPP loans, your Paycheck Protection Program. We had round 1 and round 2 of those in 2020 and 2021. And we need to make sure we're not double counting wages. You cannot take credits or take loan forgiveness on the same wages. And there are other federal credits as well that need to be reviewed if you as an employer are taking those on your tax return. So make sure to review that legislation and guidance for those potential limitations and exclusions. Federal tax return impacts for the employers, and this is talking about the annual return for the employers, not the payroll tax return, but the federal tax return. If you are expecting to receive an employee retention credit or even just talking about claiming it, please talk to your tax advisor. They need to know what years you're claiming the credit, and then once you have the actual amount of your credit, they need to know about it. Because the employee retention credit adjusts expenses on your tax return. Since many of these credits are received after the federal tax return due date, if you're filing for amended returns on the payroll tax returns, you may have amended returns that need to be done for your federal tax return. So reach out to your tax advisor, and then also make sure that you're recording it properly in your general ledger, that you have it in a separate section so both your tax preparer and your accountant or bookkeeper can know that you received these employee retention credits. So processing of these amended returns for employee retention credits. Ever since the employee retention credit came out, there are lots of companies that are processing these credits and returns. There are some companies that were just created just for this. So you may have seen advertisements about it. And some of the things that employers are running into is, how do I know who to use for this? So here at JRBT and Payroll Systems, we are processing these credits. We're processing for Payroll Systems clients who we process payroll for. We are also processing them for JRBT clients. And we have also processed for clients that weren't previously clients of ours. So some of the items to discuss with a potential processor is, one, what are the processing costs? Are you charging a percentage of the credit fee? Are you charging a per employee fee? Are you charging per quarter? What are your processing costs? What are the anticipated credits? How much credits are eligible for in 2020 and 2021? Who is determining the criteria? Who is doing that for the employer? Is that the employer's responsibility? Is the processor doing that? And how do we substantiate our qualification? Who is handling the calculations? Who's responsible for those calculations? These are all questions to discuss with them. Another thing that impacts as far as who is processing for your credits is, what is your payroll setup? If you are processing in-house, you can do the credits yourself if you feel comfortable, or you can outsource that to others. If you are outsourcing your payroll, you can talk to your payroll provider to see, are you handling this? And then compare their pricing to other entities that are processing this. Now, if you are part of a PEO setup where your wages for you as an employer are combined with multiple employers as well, you may have to do that amendment through your PEO provider. Now, please note that some processors are cutting off as far as when they're going to do this credit, where they're saying, we only have 2 more months. If you want to do the employee's retention credit, you have to get it to us by this date. Now, please note, you can still continue doing those amendments in most cases with another provider. So if you have questions as far as the points to discuss, please reach out to us here at Payroll Systems and JRBT. We would be glad to go through some of the employee retention credit with you as far as how that process works as far as an outsourced processing of it. So guidance. If you're wanting to look more into the employee retention credit, there was 4 pieces of legislation that initiated the employee retention credit, and then amended it throughout 2020 and 21. Now, IRS has issued quite a bit of guidance, which has some great questions and answers as far as if you have this situation with you as an employer, how does the employee retention credit apply to you? So they have a revenue procedure as well as 4 notices that they issued to assist employers with the employee retention credit. So if you have questions about the employee retention credit, or if you think that your entity would be eligible for it in 2020 or 2021, please do not hesitate to reach out to us. I have included my name and email address on this slide, as well as Ms. V. Johnson, one of JRBT's tax managers, who's working with me on the employee retention credit. And you can also go to our Payroll Systems website to find some contact information for me to reach out to us. We would be glad to discuss the employee retention credit, and hopefully this presentation provided some general information to you so you could review that to see if you're eligible for these credits, which can be substantial. 2020 is $5,000 per employee. 2021 is $7,000 per employee for each quarter if you're eligible. So those credits can add up very quickly and help businesses recover from everything that we went through in 2020 and 2021. And thank you for joining us today, and please reach out. Thank you.